Welcome. My name is Rick. I will be your moderator for this presentation. On behalf of Sam Goldberg and Futures Trading Coach, I present to you Introduction to the Live Trading Alert Call Room. Futures Trading Coach has been providing futures education and mentoring for 20 plus years. And if you're viewing this, you have most likely either joined our free trial to the call room or are already a monthly subscriber. This introduction is designed to assist you so that you can get the most from the call room on a day-to-day basis and will help familiarize you with the terms and trades we will be taking in the room. So let's get started. Logging into the room. There's two ways that you can log into the room. Your email to welcome email, which has the link ftc.surfnetcorp.com/my account. You can click on that link from the welcome email and you'll get to our login page, or you can go to our website, www.futurestradingcoach.com. You'll see a login link. That's showing it at the bottom. We just recently moved it to the top, but you'll find the login link on the site. Click that and then click login now, and that will bring you into the portal. Now I'm already logged in here, so let me log out real quick. That's the page it'll bring you to. If you forget your password at any time, you can click the forgot password link and have your codes mailed to you. Otherwise, you'll log into the portal here and put your information and get right to the dashboard. And once you log in, you'll see various navigation buttons at the top. You can click our calendar. That's our calendar of events. That tells the different various rooms, the times, holidays, vacations, days off, things of that nature. My account, you can edit your details. You can turn your mailing list preferences on and off, change your password, and request a callback. The mailing list archives will show you all the past mailings that were done, and you can view those at your leisure. There's also a customer service link. You can open up a customer service ticket by clicking the Open New Customer Service link and type your question in there, open a ticket, and you can communicate through our ticket system that way. There's also membership options. You can learn more about our membership options there and frequently asked questions. Now, going back to the dashboard, when you log in originally, you'll see this disclaimer and you'll see the link to click here to log into the live call room. That's where you'll log in every day. If you click that link and have a problem, you see the problems logging in text. If you hold your mouse over that text, you'll get the tooltip that explains that most likely the problem you're having is pop-up blocker issues. This happens commonly with Google Chrome, although it can happen with other browsers. If you try to log into the room and your pop-up blocker is enabled, you'll get a big yellow box under that button that will tell you that you can click an alternative link or to disable the pop-up blocker. Now, once you're able to get in, another window will come up and you'll be in the trading room. If I'm in the room, you'll see my charts up there projecting. Otherwise, you'll see this blue background that says no application shared at this time. That just means I haven't arrived to the room yet. Sometimes people log in before me. Once I come in, I'll project my charts and you'll see them in that area where the blue box is, where the blue background is. And that is logging in to our portal and trading room. First, the basics. In the call room, we will be looking for trades in both the S&P E-mini ES contract and also crude oil CL. We trade with an initial 2-point hard stop in the ES and a 20-penny stop in crude oil. For all but one of our setups, that stop never changes or moves, although we very well may take less than a full stop if the market conditions change before the trade starts working for us. What this means is we don't always have to take a full 2-point or 20-penny stop. It certainly can be less, and as your moderator, I will assist you in determining that on a trade-by-trade basis. The only exception to this rule is with our power play setup. More on that later. It's the only trade where we may potentially get to add to our position, giving us a better average, and that would require us to adjust our stop since there's a second entry. I will outline more on that in just a bit. Next, the setups. At Futures Trading Coach, we trade with 4 basic setups. There are more advanced trades, however, those are not covered or traded in the call room. They are reserved for those that learn and know our methodology as more advanced understanding type of trades so that we can have more options during our trading day and thus more potential profits. That being said, the 4 setups we use and look for on a daily basis provide more than enough opportunity for us to profit in the markets. First, we have an S play. S plays are always a long trade. So if I call an S play, no matter what, it will be a long or a buy. I will also announce the direction in the room before the trade, but knowing this in advance will help you on a day-to-day basis with the trades. The second setup we have is an RS. RS setups are always short. So if I call an RS, just know in advance it's a short or a sell. Again, I will call the direction as well, but writing this down and taking notes from this presentation will help you better be prepared so that you can get the most out of our trading room. Third, we have a ZL. ZLs can be long or short, so you will have to carefully listen in the room as I call the trade and also listen for the direction. The fourth and final trade setup is our power play. Power plays can be both long or short as well. This is the only setup, as previously mentioned, where we may add contracts to the position once an initial trade is placed. So if you initially put on a 1 lot and we add to the position, you would put on another 1 lot for a total of 2. If you started with a 2 lot, you would add another 2 for a total of 4. And I will let you know at that add point and price if and when it occurs. Some students have previously asked the question, so in this case, are you guys adding to a loser? The answer is absolute no. There's a reason why we sometimes have to add to this trade. The trades only pull back to the point where you potentially can get to add to the trade about 30 to 35% of the time, and it is in no way adding to a loser. Why? Because we know in advance, based on our astute, rigorous, and most importantly, time-tested history of trading, what it is that is going on in the markets and why this can occur. The specific reasons of why the trade sometimes pulls back is something we don't get into the call room itself, as there could be several videos just on this topic alone, and it's something you would learn if at some point you decided to learn the methodology taught exclusively by our method creator, Sam Goldberg. Just know that it's perfectly normal for the trade to sometimes pull back, and you would have to add to the position to give yourself the best chance of success and for the trade to work for you. Should this happen, I will clearly announce in advance where we would want to add to the trade and where to move stops based on our average overall position. Trades and trade management, the S play. Now, as you can see here, this is a long trade. I call it an S play at 1839 quarter. Now, what we're doing is we set a limit order at 1839 quarter. We're waiting for it to get filled so that we can get in the trade. We always trade with an initial 2-point stop. Now, I'm using an ATM strategy in Ninja here, so you'll see as soon as that order gets executed, my stop is at 2 points. Okay, I've got a 1-point target for the first 2 contracts, which was just filled, so we've made a point on 2. Now I'm moving my stop on the remaining 2 to -1 from the entry, 1838 quarter. Now I'm waiting to see if the second target will get filled, which is 2 points up, as you can see at 1841 quarter. Once that gets filled, I've got 1 contract left. I move my last remaining contract to entry, and I'm waiting for either material change in the marketplace or for the next target to get filled. Now what happens is the candle closes, I see a material change, and I get out of the trade, which I will tell you guys in the room. And that's how we manage our trades. Trades and trade management, power play with an add-on. Now here what I've done is I've called a power play. The price is 1840.50. What that means is we're looking to get long at 1840.50 if there's a print in the market of 1840.75. So we're looking for the market to print 1840.75. That means as soon as the price touches 1840.75, we look to get long at 1840.50. What I do is I put my buy limit order. If you're trading on the chart, if you're trading in a dome, you can do it. I put my buy limit order there. As you're watching the chart, I'm waiting for that. As soon as the market prints 1840.75, see, I'm holding it right there. You can't let go of it, because if you let go of it, then it's gonna fill you. But you can, get ready. And again, you can do it on the dome as well. Have your order in. Now, as soon as this market prints 1840.75, I'm going to put that limit order for 1840.50. There you go. Now I'm filled. Now I'm going to go with a half a position. Okay, now if this market goes right up to our targets and fills us, which it does 70% of the time, then we'll be able to make profits. About 35% of the time, what happens is it ends up pulling back, and we look to add to our position 1.5 to 2 points down, and I will call the price out. So right now it's 40.50. Okay. What I'm looking for is for it to go. I'm looking for it to go, which it normally does. It looks like it's trying to right now. Okay, and if it goes, then there's nothing to do. We've got our 2 lot on, and that's it. As soon as I see here that it doesn't look like it's going to go right through, because it should go sooner than this typically, I know we're going to have to add, potentially. So what I'm going to do is I'm going to get ready. So I'm moving my stop down. I'm going to make a call to add, okay, to add another half a position if the market gets down and prints 1839. Usually this will be anywhere from 1838.50 to 1839, 1.5 to 2 points. So I've made the call to get long at to add at 1839 another half a position. Now, if this goes right here, then there'll be nothing to add. If it comes back down and gets to 1839 again, we'll be long with a second half of position, which in this case is 4 contracts. But you do the same thing with 2. It would be 1 and 1. So we're waiting here. And this thing is going to either go up, go back up to 40.50, and probably go and start giving us some profits, or it's going to come down and it's going to fill us. We'll have our full position on and an extra opportunity to profit. Now it's filled us. Now, okay, we added our second position at 1839. That means our stop must be 2 points from where we added, not from the original position, but from where we added. So 2 points from 1839 is 1837. You see that my stop is there, and that's where we get stopped out. Otherwise, we look for this thing to come into profits. Now, you're going to see in this example that what I did was I put the first target a point from the original entry. There's a couple different ways you can manage it depending on how many contracts you have. Okay. You could also go and take 2 off when the market gets up to 40.75. Okay. Or you could take 1 off at 40.75. There's a couple different ways to manage it. In this particular case, I'm doing it a point from the original entry. That's a little aggressive, but again, you're getting the gist of how we're taking care of these things. What I'm opting to do is hold 3. I'm looking to get 1 point from the original entry. But again, you could have a 2 lot at 40.75, for example. Or take something off at 40.75. See, now what you're seeing here is that it's staying away from the 40.75. There's a reason for that, and people who are in our mentoring room and methodology room understand that. So what I'm looking to see is once this thing gets to 40.75 again, it's probably going to go. And if it doesn't, I'm going to manage my contracts accordingly. But for the purposes of this, we wanted to show you how you would add to the power play. Now, if this thing comes down to 1837, we're stopped out. 2 points from where we added at 1839. 1839 was 1.5 points below our original entry of 40.50. Now it's going to come up, fill me on 3. I'm going to immediately move my stop on my remaining contracts to entry because it's went 2 points from the entry. And it's either going to fill me here or I'm going to look for a material change to get out of the trade. And it filled us, and it's a profitable trade, and it was a winner. Your questions answered. These are questions that have came in from traders and people that have inquired about our service all around the world, and we wanted to share a couple of the common ones with you right now. First question comes from Ben in Massachusetts, USA. What are the trading alert room hours, and when do you suggest I log in each and every trading day? Well, Ben, the hours are between 8:15 and 11 a.m. Central Standard Time. We can log in as early as 8 o'clock. Sometimes we start to take trades as early as 8 o'clock. Officially, we say 8:15, but we do have people that start to log in the room 7:45 to 8 o'clock, and that would be a great time to get in there. And sometimes people are even in there before me, waiting when I log in and project my chart. So officially 8:15 to 11 Central Standard Time, but you can log in as early as 7:30, 7:45 if you want, and then that way you'll be in and ready to go. Next question is from Carol, Sydney, Australia. I've been trading for a while, have my own sets of tools and charts that I use. Can you recommend a way for me to still utilize things I've learned in the past along with your methodology? Well, Carol, you're not really going to learn in the call room. Call room is just going to be calls that are going to be made, and we're going to say go long or go short. I do not recommend having any of your existing tools up there because what we found is that people just kind of get conflicted. What we do in our methodology is a lot different than most of the things that you've seen. So what ends up happening is people get into a situation where they may have on their chart from stuff that they've done in the past to go long, and I'm calling a short. And what it does is it just causes a conflict. So the best thing to do is to just take everything off your chart, wait for the calls, and take them accordingly. And that's usually how people have had the best success. Next question from Harish, Mumbai, India. I'm only a one lot trader. Will the call room still be a benefit to me? Absolutely, Harish. Most traders that start with a one lot, two lot. One lot trader, what I would recommend is that you take your profit at a point. We always take profits along the way. And if you can end up, if we get 2, 3, 4 trades during the day, hopefully that you'll end up with 2, 3, 4 points. And that's really, really nice for a one lot trader. If you are a one lot trader, what I'd suggest is maybe using your discretion to the best that you can, maybe depending on if you're up for the week or how you're doing during market on open. Market on open is the first 9 minutes of the trading day, and anytime we would take a trade around the news, we never take a trade during news, but if there's a trade called going into the news, and you're only a one lot trader, you might want to consider just passing on that trade, but you certainly don't have to. We do recommend taking all the trades. It's just during those times, usually we want to go a little bit smaller size. One lot traders, you can't trade a half a lot. So, that's kind of discretion. We leave that up to the trader. But absolutely, one lot traders can do very well in the room. And then, you build it up to 2 and then 3, and you go from there. And eventually you decide to learn the methodology. At least that's what most people do. This comes from Johnny, New York, USA. Please tell me the various benefits that traders have by joining your call room. Well, Johnny, people use the call room simply for two or three different things. They either just want a call room, they have no intention of learning a methodology, and they just want the calls. So they come in the call room, they get the calls, they go about their business for the day, and that's it. There's a second subset of people typically that are ready to learn the methodology. They took the 3-day trial or the trial, whatever was offered at the time, and they just want to see more. So what we say is, absolutely sign up for a month, 2 months. Even after a month, what we say is after 20, 25 trading days, you should see clearly and be very happy with what you're seeing and excited, and then you'll move on to the methodology. Now that to learning the methodology, now that assumes that you have the money to do so, which brings us to our third subset of people. A lot of people come in and say, look, I love your methodology. I took the trial. I want to learn this thing. I need to learn it. I just don't have the money. So what we say is, well, you come in the call room and you try to get to that point at some point. You build an account up and you get to that point, and then you'll be able to eventually come and learn the methodology. And there's probably other subsets of people that are using it various ways, but those are the 3 common ones. Last question is from Rochelle, San Diego, California, USA. For the power play setup, should I be trading an initial position of half my normal size or simply be prepared in cases where the market pulls back to just add, which would technically be double my normal size? Great question, Rochelle. I'm going to say that the safest thing to do is to go with a half a position and then add a second half a position. We really leave this up to the trader. The power play will pull back to the point where we have to add about 30 to 35% of the time. So statistically speaking, some traders will say, well, I'm just going to go and add my normal size, and then I'll go and add, I'll just add if I have to, and we'll go from there. The safer, more conservative thing to do is to go with a half a position, and that's what we recommend, especially till you learn the methodology. And then you would add your second half of your position if the market pulls back. And we do have one more question. One more question that came in from Cheng Gao from Guangdong, China. I've been in your room for a few weeks and I love the methodology. What can I or should I do when I want to take the next step? Actually learn the method with Mr. Goldberg. Great question, Cheng. What you would want to do is you would want to go to our site. You would want to fill out the request to call back. Those links are all over our portal. You can do it from our website itself. There's a request call back right on the home page and on the left navigation links. Or you can log into the portal where you log into the room each and every day. And there's a request to call back link right on the dashboard and on several of the submenus throughout the site. Let Sam know when the best time to reach out to you and what means you have via phone or Skype. And Sam will reach out to you. He'll speak with you. He'll get a feel for where you're at, what you're looking to do, explain to you the steps and what to expect when you learn the methodology. And you guys go from there and you set up a time to get started. And that's all the questions we have for right now. In closing, I'd like to thank everybody for taking the time to view this presentation. I think it will help you in the call room. Remember that this trading room is for you guys, the traders. If there's any slides or anything you think that might benefit you that were not discussed, please shoot us an email. My email is there as well as Sam's. Let us know what you think you'd like us to go over, add, anything like that, or cover in more detail, and we would be happy to do so. We will also answer any questions outside of that as well, but that will make the presentation better for future traders as well. So until we see you in the room, guys, happy and safe trading, and see you later.